Well, Mika, I let you hear the end of the song just for you because Sean's running late, my co-host. So I'm riding solo today until he gets here. So anyway, thank you so much for joining Industry Update. It is our Monday afternoon quick update around numbers. I think one of the important things to make mention of, kind of before we jump into the numbers, is there's certain dates on the calendar that affect our real estate market. And one of those dates is when school starts. And not all, but a lot of the schools started school back today. So I'm sure you probably felt it in your commutes this morning. If not, it's coming in a week. And next week, the school starts. But regardless of where you live in school starting is certainly a date on the calendar that indirectly affects our real estate market. And it's worthy of mentioning, just like Labor Day and Memorial Day and Juneteenth and all the different holidays that show up in the summertime. They have a effect on numbers. And so I'm going to jump into the numbers and we will go from there. So let me pull these up. All right, Fulton County. 816 active listings. That's 816 opportunities. Fulton County's kind of been hovering around 800, give or take, which is a really good, healthy number. If you look at the chart, we are way up from where we were kind of at the start of the year. We just had this climb of inventory, which, I made mention last week, six months ago, we were begging for it. Now we're like, oh, is that too much? No, not really. But at the end of the day, it's a good, healthy inventory number. The other numbers are probably a little more important to be tracking right now. 147 active under contract. Look how healthy that number is compared to where we've been lying the last couple weeks. So that's kudos to us and getting out there and selling property. We've got 361 pending in Fulton County, which is higher than it has been in the last couple of weeks, and 231 closings. Not really excited about that number, but sometimes our market goes in waves. So if we've got great indicators on active under contract and great indicators on pending, and then the closings were a little bit down, I still feel good about what's coming forward, if that makes sense. I could just focus on this number and go, man, that's a little bit of a lower number than we've experienced. Yet the second week of July, which also had 4th of July in there, was a little bit low as well. So not enough data to make an inference around that. Yet the number I want to point out is this one. So obviously, real estate agents for years have been trained to expire their listings the last day of the month. So we always have a spike in expired listings at the beginning of the month. You'll see it here, you see it here. But what we traditionally have not had is a spike the second week of the month. So a little bit of an outlier here on expired listings. What do I make of that? It could be we're still pricing property based off of activity 4 months ago, and we're not necessarily getting real with pricing with our sellers. That could potentially be it. Do I think less properties are selling? Not necessarily less properties, but we kind of poked fun that said even the ugly houses were selling 6 months ago. My guess is good priced, good condition, well staged, well market houses are still selling, but not all. And it's important to kind of pay attention a little bit here. DeKalb County has 480 active inventory, 82 under contract, 198 pending, 165 closing. They had a spike in expired listings as well. Now I could make an inference around maybe people expired their listings right before school started if it didn't sell. I don't know, but it's certainly worthy of paying attention to. If you get out to Cobb County, we've got 566 active, 239 pending, 100 active under contract. Good, healthy numbers on the future. 186 was a little low in closings for Cobb County. And then if you jump up to the expireds, you saw a little spike in the second week of the month on expired listings. Like I said, I'll just recap. To me, as real estate agents, we like to get aggressive with pricing sometimes. And the sellers might have been a little more pushy, I guess is the right way to say it, around getting us to aggressively price listings. And the skill set going forward is not going to be just throwing a price out there. It's going to be really pricing properties very effectively and very smartly. And then, you know, you got to play the staging game. You got to play the great photography game, the great marketing game. Just a little change in the numbers. Remember, we look for trends. So trends tell us what we can expect, but then if two numbers in a row start to climb, it starts to tell us something's moving. So we're watching that. But like even in Cobb County, 186 closings, back the second week of July, there was 151. So I'm not nervous so much about this number as much as I'm encouraged by active under contract and pending, and then we're paying attention to expired. Does that make sense? I could just jump over to Gwinnett real quick and just see if the northeast suburbs were holding the same numbers. 729, 84 active option, 247 pending, and then 217 closings. And then they had a spike in expireds as well. So it obviously is something going on in the Metro Atlanta area that is causing more listings to expire, and it's worthy of paying attention to. Any other thoughts, questions, comments around that? Crazy. Okay. Next thing that I want to talk about is this article that hit Inman News. And basically it says, Keller Williams president Mark King, real estate has become consumer centric. So let me scroll down here in this article and find the part where he talks about, he believes the industry has moved from broker centric to agent centric to now consumer centric. And here's my best explanation of this. So 50 years ago, the real estate industry was what they call broker centric, meaning the consumer really cared about what broker listed their house. The real estate agent put a lot of weight on who the broker was, and the broker was very much the center of the real estate world, meaning it was very focused and dependent upon the broker. They still exist today, but the philosophy kind of shifted sometime in the 80s to what we call an agent-centric model, which means we believe the consumer chooses you to do business with, and the broker kind of comes behind you and supports you. Well, now what they're saying is they believe the consumer is in a little bit more of the center of the transaction, meaning the consumers has a whole lot more power in getting their own data, how their transactions are conducted, and we're not as much in the power position, meaning you know, in the past they had to come to us to get the data. Now they can get the data on their own. In the past, they needed our support to facilitate a transaction. A lot of consumers are getting more and more educated to where they believe they can conduct their own transactions. Is that a good thing or a bad thing? It's neutral. The question is how do you evolve your value proposition to really focus and understand the movement of the industry, if that makes sense. So I believe you could look at some other industries, like take if somebody was putting money into the stock market or in Wall Street. There was a period of time where they believed they had to have their money with Merrill Lynch, or they had to have their money managed by one of these high-powered money management companies. Then they believed the actual stockbroker was really important to who managed their money, agent-centric, right? Well, there's a lot of consumers now that believe they can manage their own money, and they go do an Ameritrade account and they buy and sell their own stocks, because the education level of the consumer was raised around how the business was handled. And does that mean that stockbrokers don't exist? No, not at all. The good ones are still out there, right? Does that mean big brokerage house companies like Merrill Lynch and things like that don't exist? No, they still exist. They're very prominent. It just means you got to morph the value proposition you bring to the table to understand. Do I think this is 100% the way business is today? Not specifically, but I think it's a movement in the industry to understand that the consumer is becoming more and more at the center of a transaction. And I hate using the word power, but they have a little more power inside of the transaction than they had in the past. Does that make sense? I feel like it's a pretty high level conversation, but that's what this call's all about. Anyone? I explained it so well. We'll keep on rolling. All right. Big news. Open Door got smacked with a $62 million lawsuit around deceiving customers. So you got to understand the way our industry works, or actually most industries. Any industry where you have to have a professional license to conduct business, whether you're a stockbroker and you have to get a series type license, or you're a real estate professional like us and we get a license governed by the Real Estate Commission. The reason and the motive behind that by the government is to protect the consumer. They want to know that there's a standard and a way of doing business and disclosures and all that stuff to protect the consumer. So what this is saying is they're smacking Open Door with a $62 million lawsuit or claim, saying they deceived the consumer. So of course we could get excited and go, oh, the big bad Open Door got knocked off the top of the mountain or whatever. But the truth is we should all learn from this. And what you do from a marketing perspective, what you do from an advertising perspective is really important to understand that we have the FTC and all the different government agencies that want to know that we're not deceiving the end user. We're not deceiving the consumer or baiting, switching, or hiding fees and things like that. So really, that's kind of the bottom line of this lawsuit that Open Door got hit with, is their marketing basically was marketing to consumers that to save money to use their services, and they were hitting them with fees the day before closing and all kinds of stuff. So I want to make sure everybody understands that's really what this was about. Was they believe Open Door deceived consumers to their benefit. And I kind of agree with them. Now, having said that, Open Door is not going away. iBuyers are not going away. There's another article that popped that said Zillow and Open Door now team up. And Open Door is going to be the power behind Zillow to offer iBuyer, cash buyer opportunities. And here's what's interesting about this article. So Zillow's a publicly traded company. And if you realize, or just think about your own personal real estate business, 2 years ago, how annoyed were we that all our customers were saying, oh, I found this house on Zillow, or I prefer to search on Zillow. Well, you realize that's actually tapered down over the last couple of years to where Zillow doesn't necessarily have as much of a consumer mind share. They don't have as much of a foothold on the consumer eyeballs online. So because they're a publicly traded company, they have to drive valuation back to their to the stock owners, right? And so hence they're going to do partnerships like this in the future to try to up the value of both Open Door and Zillow. And I think it's really a I think it's a neutral thing to us, but I think it's a something to pay attention to, if that makes sense. Any questions on that one? All right. Well, the last big news article that's really popped was, it says the industry is warned to prepare for a $40 billion hit on commissions. And I like to remind you guys, I intentionally don't fluff this call, meaning we want to have all the real conversations on this call. So I could have chosen not to bring this article to the table, but I think it's important if you're a real estate professional to understand our industry. And here's what I would say about this. We've been talking about the NAR lawsuit that's going on in another part of the country, where they believe that the buyer or the sellers were harmed because they were forced to pay buyer agent commissions. It's not settled. It's still in litigation, but I can tell you that lawsuit has a potential of changing the way we do business. And basically, as a buyer's agent, there is a real conversation going on in our industry where the buyers will have to pay your commission in the future. It won't automatically come from the sellers. And do I think it's going to happen today? No. Is it going to happen tomorrow? No. I think it's down the road. But this is it's an article which is a little bit of a clickbait, obviously, but it's just making mention of the fact that there's a chance our buyer focused real estate part of our business could change in the future, in how we're doing that, and what's the leadership conversation around that. How clear are we on our value proposition to our buyers, and how clear do we hold our value at a high, how high do we hold our value as real estate professionals? Meaning, if somebody's going to buy a house from you, you have a really professional relationship with them and you bring value to the table for them, would they actually pay you for that commission? I don't think it's here today. I think there's a conversation that could be in our industry way down the road. I think companies like Redfin, where their whole ecosystem's based on the buyer side of the business, is really in threat. And the second part of this conversation is we really should be focused and training and growing and leading our organization to be a really strong listing focused brokerage, because just like we've always said, list to last, and listing agents are going to rule the world in the future. So the more you focus on being a listing agent, the less this kind of conversation is a disruptor to you in the future. So not a fluffy conversation, yet it's a conversation going on in the industry. I'm not going to hide from it. And do I feel threatened by it? Not at all. I think industries always evolve over time, and you just have to understand it and learn how to navigate it and go thrive in it. No different than a shift. If the economy shifts, you understand it, you learn how to go thrive inside of it. And you may have to change strategies, may have to change value propositions, but there we go, right? So any questions on any of that? See, it's not as fun when I'm by myself because I just talk the whole time and nobody talks to me. So hopefully somebody will talk to me. Come on, Hubert.
Is this a time to ask questions about anything you just talked about, or?
I covered everything I was going to cover today. So
Okay, so that statement that you made about the number of expired listings and how it's concerning. Can you provide just a little bit more, color and detail on your thoughts around that? Because I mean, I saw that too, and I'm like, well, I mean, for those of us who are pursuing listings and that kind of thing.
yeah, absolutely. So here's what I make of it. And I want to throw caution to this because 1 week is not always a great story when it comes to numbers, right? Like I'm just seeing it for the first time. So that may just go away next week. And then it was an old or an anomaly. However, I don't think so. And here's the commentary around it. I think as a listing agent, and I was listing houses in May, my pricing strategy was going to look very different at the listing table in May than it should be looking at the listing table today. Meaning I was probably not as aggressive in accurate pricing, and I was a little more flexible in how we priced listings 3 months ago, 6 months ago, a year ago, right? So I think that expired listing number may be catching up with some agents that maybe had some listings that were aggressively priced that just came in on the tail end of the demand tapering off a little bit. And because I think great houses for great prices will sell in any market.
Mm-hmm.
And where a year ago, all the houses were selling. You know what I mean? Even the overpriced ones, even the non well-kept, non-staged houses, they were all selling a year ago. And now the skill set of actually pricing a property right, presenting it correctly, making the marketing look top-notch, that skill set is very needed right now. And you'll see expired listings pop because there's still a good chunk of the business out there that's not necessarily following the pricing it right, presenting it right, marketing it right philosophy. Does that help?
Yeah, it does. And also, I mean, like I have 2 different deals right now, and both of those deals are contingent upon that buyer selling their house. And so it's like a chain reaction and like, being able to navigate that. And this is my 3rd deal within the past 30 days that I've had like this. And so, I mean, I feel like, I mean, I'm wondering what other agents are seeing too, but I mean, I feel like this is almost kind of like our current norm right now.
Yeah, I will tell you, I have heard of people walking away from $30,000 in earnest money recently.
Mm-hmm.
And I don't like that our real estate contracts don't have specific performance in it. That's a personal feeling, but the world changed on us a little bit, and we're just getting used to the new world, if you will. And you're right. Would you have taken a contingency, Hubert, 3 months ago? No. So the business is done differently now than it was just 3 months ago. And so it's just worthy of noting that we may need to have some more direct and assertive conversations with sellers, 1, and 2, if you have properties that are listed, it is absolutely time to go have some real conversations with your sellers and get to reality, because otherwise they will expire. Mark, I see you on here. You got any commentary around that?
Yeah, if I can get my camera on.
Yeah.
Yeah, I was just going to share that one of the things that a lot of our agents are doing right now is really spending more time looking at not what something's sold for, but what was the list price in the past, if it's from the past 3 months, because the list price is the price that got the offer and was probably way more in line with what the market value is than what the sold price was. So we're spending a lot of time looking at that list price.
Yeah. I just think, Hubert, to your point and to Mark's point, like when you see an expired listing number go up and it doesn't look like it's an anomaly, you should pay attention because something's not connecting with the supply and the demand conversation. That relationship is changing or off if expireds are spiking. Make sense? All right, guys, there's your industry update. August 8th. Have a good one.